Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehisha, and as always, with me is Shreyansi Singh. Wishing you a very good morning, Shreyansi. Well, this is a show where we're going to take you through everything that happened in the markets, India as well as globally, after market hours yesterday and overnight as well. In the second half of the show, we'll also take you through what brokerages are flagging off for this morning, the FNO levels you should be watching out for, as well as the stocks that you should be keeping on your radar bright and early this morning. So on that note, let's kickstart the show with the global handover. And Shreyansi, there is absolutely no stopping for Dow and S&P and Nasdaq, is there?
Absolutely, it doesn't look like there is, Snehi. So, well, let's take a look at what the market did then. When you take a look at S&P 500 futures and Nasdaq 100 futures, you're looking at a slight dip coming in on both counts. When you take a look at Dow Jones futures, then you're also looking at a little bit of a decline there as well. Now, during the regular trading session, when you take a look at what happened with S&P 500, that closed up about 0.2% higher. When you take a look at Nasdaq as well, that also closed up 0.5% higher. And let's also take a look at Dow Jones, because that one also was a shade higher in trade in the regular trading day yesterday. Now, let's also take a look at bank stocks, because they were in focus after the Federal Reserve said on Wednesday that the biggest US firms are able to withstand a severe recession scenario. Goldman Sachs shares slid 1.7%. On the flip side, you did also have JP Morgan Chase shares that rose slightly. So that is as far as the banking stocks go. And US firms are also able to withstand a severe recession scenario, as the commentary that came in that led to that move coming in yesterday. Now, stocks are in a holding pattern as Wall Street awaits the latest inflation data on Friday with the release of May's personal consumption expenditures price index, and investors also hope that the report is going to be showing easing pricing pressures that could cement the likelihood that the Fed will lower interest rates this year. So that is something that the market was really looking at, even with the sluggish trading activity, mega cap tech names. We did see them gaining. We'll tell you a little more about that later as well. And in terms of corporate earnings, then you do have Nike as well as Walgreens Boots Alliance reporting their numbers today. And on the economic front, traders will also be watching out for the latest reading of the weekly jobless claims data coming in, as well as durable goods order and pending home sales. We'll be telling you a little more about the cues that you should watch out for later as well. Now, let's also take a look at the price action in the European markets, because European stocks also fell on Wednesday, extending negative sentiment seen in the previous session. So when you take a look at the Pan-European Stock 600 index, you're looking at declines of about 0.5% coming in there as well. And that is after it rose earlier in the session. When you look at DAX as well as FTSE, you're looking at declines coming in there as well, Snehi.
All right, so those are the moves coming in from the global markets, then US as well as Europe. But with that, let's shift focus and talk about what's been happening in the world of oil. And oil prices rose yesterday despite US inventory data that showed an unexpected build in oil and gasoline inventories. Remember, yesterday we had the API weekly crude oil stock also coming in from the US. Oil prices were higher initially but have pulled back now, because what I'm looking at as WTI oil at $80.56 a barrel, slightly above that $80 per barrel mark, and that's 0.4% lower, almost 0.5% drop coming in on that front. And Brent also, as of now, just nominally under 85 at $84.9 per barrel, also with a 0.4% cut coming in. So those are the levels that we're spotting at WTI and crude as of now. But crude oil stockpiles rose by 3.6 million barrels last week, according to the data released by the EIA. Analysts were expecting inventories to fall by 2.9 million barrels, according to a Reuters poll. However, supplies remain about 2% below the 5-year average for this time of the year. And gasoline stockpiles have also risen by 2.7 million barrels, while analysts were expecting a drawdown of 1 million barrels. So very fluctuating, outcomes coming in compared to what the street was penciling in for these numbers to be. Rising crude and fuel inventories signal that demand may still be soft, but analysts have also been waiting for summer fuel demand to pick up after a soft start to the season. However, prices were gaining support from rising Middle East tensions over the course of last week. Traders are monitoring the situation on the Israel-Lebanon border. Israel and the Iran-backed militia group Hezbollah have threatened war recently. after trading a fire across the border for months. There are fears an Israeli offensive in Lebanon could trigger a direct confrontation with OPEC member Iran, potentially jeopardizing crude oil supplies. Lots to watch out for when it comes to the movement that we're seeing in WTI and crude as of now. You have the entire demand supply scenario playing out where supply has been more than what was being penciled in, so that is weighing on oil prices. On the other hand, you have geopolitical pressures that could potentially lead to a spike in oil prices. Mixed cues coming in, and important notes to watch out for when it comes to oil prices. With that, let's also take a look at what gold is doing, because gold has fallen to a 2-week low as higher dollar and yields dent appeal. So on the back of that, gold is at $2,309.6 per ounce as of now, trading with a cut of almost 0.2%, close to those levels. So that's where gold is. What's interesting to also know is treasury yields. Let's take a look at what US 10-year bonds have done, because they have climbed as investors are weighing comments from Fed speakers. And as of now, US 10-year at 4.343, slight spike coming in on that front as well, but not much to worry about when it comes over there. But Shansi, with that, also take us through what events we need to watch out for today. Lots happening on the corporate action front at least.
Well, absolutely. And before I do that, it does look like gold prices were really taking note of the yield uptick that you mentioned, Snehi, as well. But let's also take a look at events that we should keep on our radar. From India, you do have Nifty's monthly expiry as well as the SEBI board meeting. And that will remain in the spotlight in terms of global cues. Then you have from the US, like I mentioned, initial jobless claims data, GDP and wholesale inventories data sets coming in. So those will remain in focus as well. And from the UK, there is Bank of England releasing financial stability report, so that will remain in focus, along with Eurozone's economic confidence as well as consumer confidence data sets coming in. Now from China, you do have industrial profits data, so that will be in the spotlight. And in terms of corporate action, back home, there's a whole host of counters that will remain in the spotlight. So you have Share India Securities that will be executing a stock split in face value to rupees 10 to 2 per share. So that will remain in focus, and 3 counters also have an AGM. So Devyani International, Supreme Petrochem as well as Titan will be in the spotlight on account of that AGM, and Orion Pro Solutions will also be trading X bonus in the ratio of 1:1. So that counter will be in the spotlight, along with Sanghi Industries that has an OFS that opens for retail investors. So keep an eye on that one as well. And there's a meet for corporate purposes when it comes to Jindal Stainless as well as Kalpataru projects. So those 2 counters will also be in the spotlight, along with a whole host of counters that companies that will be mulling fundraise. So that on account of that corporate action, you do have the board of InSwift Labs, RBL Bank, AU Small Finance Bank, Saturn Credit Care as well, mulling fundraise. So all those counters will remain in the spotlight. Now in terms of the primary market action, you do have Allied Blenders IPO that closes. So that will remain in the spotlight. And lastly, the lock-in period also ends for KFin Technologies. So that one will also be in the spotlight, Snehi.
Absolutely, lots to watch out for when it comes to cues in today's trading session. But I am particularly excited about that India versus England semi-final that we are going to be seeing on the T20 World Cup front today. I'm very excited for that. Let's hope India backs this one and moves on to the finals. But moving on, updates galore this morning on the global front. Let's kickstart our coverage with home sales in the United States that have unexpectedly plunged to a 6-month low in May as lofty mortgage rates continue to weigh on demand. However, what's important to note here is that supply is at a 16-year high. The housing market has been the sector hardest hit by Fed's rate hikes. It had, however, pulled out of the slump starting in the 3rd quarter of last year as an acute shortage of previously owned homes boosted demand for new construction.
Moving on then, Federal Reserve's stress test results show that big banks in the United States will be able to withstand a severe recession. This as they maintain ability to lend to customers. According to the survey, each of the 31 banks in this year's regulatory exercise cleared the hurdle of being able to absorb losses while maintaining more than the minimum required capital levels. The stress test assumed that unemployment surges to 10%, commercial real estate value plunges to 40%, and housing prices fall 36%. This year's version included giants such as JP Morgan Chase, as well as Goldman Sachs and credit card companies like American Express as well.
Alright, shifting focus to money markets where the Japanese currency yen has plunged to a 38-year low while blowing past levels which traders believe would attract intervention by the Japanese government. Remember, weakness in the yen came even as Japanese officials warned this week that they would intervene in the event of excessive volatility in the currency market. Yen's latest bout of weakness comes following dovish signals from the Bank of Japan at a meeting earlier in June, and as of now, if you take a look at Nikkei, sharply falling in trade, more than a 1% cut coming in 450 points lower is where the Nikkei is trading as of now.
Alright, and with that, let's turn our attention towards what's been the talk of the town, tech darling Nvidia. Important commentary coming in from the top boss Jensen Huang, who has alluded to company's AI advantage to a bet made more than a decade ago. Huang's comments came during company's shareholder meeting following more than 200% surge in the stock over the past year. Without naming competitors, Huang also laid out their strategy to maintain leadership while also foraying into new markets within the AI space. Additionally, he also said that Nvidia has a virtuous cycle that motivates them to make improvements and attract more customers.
Let's keep it going with news about the chip makers because Micron shares have extended losses on the back of a sluggish revenue forecast that failed to top analyst estimates. Shares have, however, more than doubled in the past year as the company rides the artificial intelligence boom, and CEO Sanjay Mehrotra said the company's AI-oriented products were likely to increase in price and that the company's data center business grew 50% on a quarter-on-quarter basis.
Well, as promised, let's also take a look at some mega cap stocks. Retail giant Amazon's market cap scales $2 trillion for the first time. In crossing the milestone, Amazon joins Nvidia, Apple, Alphabet and Microsoft, all of which are worth $2 trillion or more. Important to note here that it took nearly 4 years for the company to cross that $2 trillion milestone after it scaled $1 trillion in market cap back in 2020.
Let's keep it going with stocks this morning, and denim major Levi's shares plunged 12% after the company reported lackluster Q2 results wherein revenues took a hit. The company posted better than expected earnings as its direct sales to consumers and cost cutting continue to bear fruit. They also raised their dividend by 8% to 13 cents per share, its first increase in the last 6 quarters.
Alright, let's stay with earnings then. Jefferies delivered a beat in their Q2 results as the bank earned higher fees from advertising on deals as well as underwriting, stock and bond sales. Jefferies investment banking revenue in the second quarter soared 59%, aided by strength in their advisory as well as equity and debt underwriting business. Thanks to strength in equities, their capital markets revenue jumped 24%, taking the total revenue growth to 60%. So that's an important update coming in for Jefferies on account of higher fees from advising on deals as well as underwriting stock.
Alright, that's a wrap on all the big global stories we were tracking for you this morning. Lots to watch out for today as well on the back of news flow as well as everything that's been happening globally. But viewers, with that, we'll slip into a very short break on this edition of Market Cafe. We'll be right back with how the Asian markets are doing. Nikkei is sharply under pressure, so we'll take a look at that as well.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then. And what you're looking at in terms of Asia is not a good move coming in across indices. So Asia Pacific markets opened lower as the Japanese yen weakened to a near 38-year low late on Wednesday, hitting 160.82 against the US dollar. The yen last breached the 160 level against the dollar 2 months ago, prompting the Japanese government to prop up in the country's first currency intervention since 2022. Japan's year-on-year retail sales growth for May came in at 3%, higher than the market forecast of 2% that was being penciled in. Let's take a look at what Nikkei is doing, and not that well is what it's doing currently because it's down over 1%. Previously, it was down about 0.8-0.9% and currently deepening those losses as well. Investors in Asia will also be looking toward China's May industrial profit numbers, which will be released on Thursday as well. Let's also take a look at Hang Seng. That one is also on the back foot, and on your screens it's down 1.4% thereabout, and Shanghai also in the red. Let's also take a look at what that's doing. That's about 0.7% downtick coming in for Shanghai on your screens. Now let's also take a look at South Korea's Kospi that declined 1% earlier, and right now it's also down about 0.5% thereabout. And let's also take a look at Australia's ASX 200 then. That opened 1.5% lower. Currently it's down about over 1%. On your screens back home then, we shut shop around the 23,860 levels. And what you're looking at in terms of what the Nifty implied is indicating on a spot basis is a rather weak start, especially on a spot basis, and even on a futures basis, we're not looking at a good start at all.
All right, well, yes, so some pressure being penciled in on our markets today on the back of mixed or rather positive news coming in from US, but lower side on the European as well as Asian markets, that pressure being seen on our implied open. So, well, indicating a subdued start, but with that, let's also take a look at the entire lineup that we have for you today on the market, starting with the top brass of Tata Motors, the group CFO, as well as the MD, and ED will be joining us as PB Balaji, Shailesh Chandra, as well as Girish Wag. Moving on to an ET Now exclusive at 8:25 a.m. We'll be joined by SN Subramanian, the MD and Chairman of L&T. Lots to talk about and lots to chat when it comes to this on this front. At 8:30 then, we'll be joined by Itira Davis, MD and CEO of Ujjivan Small Finance Bank, to talk about what's been ailing the company recently and what's the path going ahead. At 9:20, we'll be joined by Dheeraj Agarwal, the MD at Ambit Investment, who's going to talk about his strategy to beat the street as of now and what sectors or themes he's currently positive on. At 9:30 then, let's talk about the ethanol blending push. We'll be joined by Atul Chaturvedi, the Executive Chairman at Sri Renuka Sugars. At 9:40 then, we'll be joined by Vikramaditya Gorineni, the ED at Amara Raja Energy, and he's going to be talking about the entire exuberance that we've been seeing in the battery spaces and especially the uptick that we've been seeing in the stock over the last couple of sessions. Lastly, at 10 a.m., we'll be joined by Vikas Goel, the MD at PNB Gilts, who's here to talk about the India bond inclusion in the JP Morgan Index. So, lots of interesting managements as well as market guests lined up. Stay tuned to the market all throughout the day today. Welcome back, Silverwater Market Cafe on ET Now. Let's talk about a budget exclusive as we count down to the big budget day in July. Sources tell ET Now that the new PLI schemes may be in the pipeline and that the Finance Ministry is evaluating proposals for new schemes. My colleague Prakash Priyadarshi has all of those details in this report.
Yes, we are learning from our sources that the government is likely to announce some new PLI scheme in the forthcoming union budget. We are given to understand that the Ministry of Finance is considering various such proposals which have been prepared by the different ministries after wider consultation. Sources are informing that the new PLI scheme is likely to be announced for the steel sector, which is going to be second such PLI scheme, and for that Ministry of Steel has already done extensive groundwork. In fact, the consultation process has already been completed and the products have already been identified going to be covered under the new scheme. In addition to that, sources are also informing that some new sectors are also going to be covered under the PLI scheme, and that include sectors like chemicals, toys and footwear as well. The industry has already made a strong case to launch a PLI scheme for these sectors, and we are given to understand that now Ministry of Finance is considering this proposal. In addition to that, sources are also informing that the fund allocation under existing PLI scheme is likely to be increased as well. We are given to understand that the fund allocation could be increased by more than 30% based on demand. As you are aware that the government has already launched a PLI scheme for 14 sector, and now we have been informed that some other sectors are being considered and that could be announced in the budget. That will help government to increase domestic manufacturing capabilities. Along with that, that will also help to generate more employment going forward.
All right, thanks Prakash for that update coming in on that PLI, Philip, that might be in the works. But let's move on then, and from reserved railway ticket bookings to facilitating couriers, IRCTC is all set to launch a new avatar of its mobile app to bring all the services under one roof. Moreover, it will also be offering freight services to customers, which could lead to adding major e-commerce players as clients. Sources say that IRCTC's super app is included in the 100-day action plan of the Indian Railways. My colleague Sameer Dikshit filed this report earlier. Take a look.
Railways is planning to come up with a super app that will provide all these services through a single platform, whether it be to the passenger side or to the freight side. This super app will be termed as IRCTC app and will have two options. One, the passenger, and the other one, the freight. So if you are a passenger and if you are looking to avail the service, whether it be booking a reserved ticket or a unreserved ticket, even booking a meal when you're traveling on train, or booking a flight, a cab booking, a hotel booking, anything that will be provided through this IRCTC super app. Similarly, if you are a freight customer, if you want to book a parcel that to be transported to some other city, one unit of parcel can also be booked. So through this super app, you can avail all the services related to the freight side as well. Now, what IRCTC is looking to achieve through this super app, the first agenda or the first target is that IRCTC is looking to expand the customer base. As of now, of the total reserved ticket booking, approximately 80% is done through the IRCTC app, but IRCTC or Railways is looking to expand the revenue with this super app. Secondly, the freight customers, the ministry or IRCTC is looking to attract new freight customers, expand the freight basket as well, and that will help to increase the revenue. So these are a couple of big targets that Railways is looking to achieve through this super app, but this app will be like a one-stop solution for all the railway needs. It is a part of Railway Ministry 100-day roadmap or the agenda, but to ensure that everything is put under the right boxes, this app can be rolled out by December. So this is for sure that this year itself, this super app will be rolled out. But yes, this super app will help to expand the user base and the revenue base for the railways.
All right, Samir, thanks so much for taking us through that. But days after SEBI began front-running probe on Quant Mutual Fund, the company said that such reviews are common globally and that the market regulator has not issued any warning to it or its employees. Quant also allayed liquidity concerns arising due to the probe. Listen into Sandeep Tandon, the CIO at Quant Mutual Funds, and what he had to tell us in terms of the clarification on this SEBI front-running probe. Listen in.
All the big mutual fund, smaller mutual fund, anybody in the mutual fund regulatory body do ask these questions, and it's our bound to duty to respond. Good part is that at least Quant Mutual Fund has been one of the most transparent outs. We provide any updates to our investor. We are very early to print our fact sheet reports. When the SEBI talked about the risk assessment, the stress test report, we were the first to come out in terms of policy, disclosure. The gross info remains normal, whatever we are getting. Yes, gross outflow because of this noise and narrative has increased. Our liquidity is very, very robust. We still have a line of 650 crore, which we have never used in our life.
All right, then that was a clarification coming in from Sandeep Tandon, CIO at Quant MF. But let's move on then. And Tata Motors expects the demerger of its passenger and commercial vehicles business in the next 12 months. Listen in as the auto majors' top bosses share their strategy with your channel.
Purpose of the demerger is to ensure that we are able to make each of these businesses stand on their own, make them agile, and also put disproportionate focus on the respective businesses. They are pretty large in their own right, so it is important that we give them the requisite focus. That's the primary purpose.
On the margin side, 15% was the guidance for FY28. Is that on track? And also, what are the factors that will aid this kind of growth going forward?
We have put out a 10% margin for FY26. That 15% is more the guidance that that's what we put out as a focus area for us, as an aspiration that we would like to deliver. We haven't called out a time frame for that, but that is what is going to decide the decisions we take in terms of portfolios, the cars that we launch, and the actions that we need to take. But if JLR has to become a premium luxury business, that's the kind of margin expectation that you would expect out of a premium luxury business, and that's what we are working towards.
So currently, as far as China is concerned, the business of JLR from there, what are the import volumes, first off? And second, how do you see China's market growing going forward in the next year?
See, the import business in China is roughly about 60,000 vehicles. That's what we are bringing into China at this point in time. Yeah. And the domestic business, we also manufacture locally in CJLR, which is for the domestic business. That is where we have now announced a transaction with Chery to actually use the Freelander brand in order to develop the products from here on in the CJLR portfolio.
Did not share any market share as far as EV is concerned in FY30. we said that our penetration in our portfolio would be upwards of 30%, right? As far as PV is concerned, the overall PV EV combined market share, which today is about 13.5 to 14%, we aspire to take it to 18 to 20% by FY30.
Speak to us about the growth outlook post the demerger. Is there a target or a ballpark figure you are marked in terms of volume growth, etc., for both PVs as well as EVs?
Sure, that's why I explained that we are targeting 18 to 20% market share in a market of 6 million by FY30. So you can do the arithmetic, and therefore the number would be upward of 1 million is what we would be targeting by FY30.
All right, let's move on then and shift focus to some stock-specific action. Dr. Reddy's will be in focus today because that company will be buying the British consumer healthcare company Haleon's consumer healthcare brand in the nicotine replacement therapy category. Outside the United States, this is for £500 million. The acquisition will enable Dr. Reddy's to gain access to a global over-the-counter anchor brand. Let's listen in to Dr. Reddy's CEO Erez Israeli for the deal rationale.
This asset is very profitable. We are going to use some of this profit also for investment in the brand. As we believe that there is an opportunity to grow the brand, as well as there are certain considerations of expenses that we'll have to incur at the beginning. So if you add all of that, it should be in line of our normal guidelines, even maybe a plus of the 25%.
All right, then that was a word coming in from the top boss at the company. But let's keep it going with Dr. Reddy's then, and let's take a look at a couple of brokerage notes coming in on Dr. Reddy's as well as PI Industries. On the back of acquisitions for both the companies, Sharad is standing by with the key takeaways.
Well, there's two important acquisitions coming announced. The first one being Dr. Reddy's. Now, brokerages like BofA have stated that they have given a maintained buy rating with a target price of 6,900 rupees per share, and they have stated that building an over-the-counter product is now possible, especially with the acquisition of NRT brands. Also, the acquisition is in line with the stated strategy of investing in sustainable growth levers, and they are seeing that this business could replace Relumid whole over the time. Also, they have stated the deal could be EPS neutral in the year 2 itself, assuming a gradual growth and 25% margins. Jefferies also came out with its report, and they have stated that the impact of the synergies of this acquired portfolio should start reflecting over FY27-28. The acquisition is implying a 2.3 sales and a 9 times EV EBITDA on calendar year 2023 numbers. And on the con call itself, Dr. Reddy has stated that the deal is expected to be margin accretive and remains confident of achieving a 25% EBITDA margin on a consolidated basis. PI Industries also had an important acquisition, and Jefferies has stated that this is a biologics acquisition and this is in line with the stated growth focus of the company. Also, this acquisition gives access to the product portfolio for major crops in key global markets, and the potential size estimated to be roughly $75 million. Overall, the valuation of the deal is likely on the accretive front, and Equirus also has maintained a long rating with a target price of 5,500 rupees for PI Industries, and they have stated that this transfer of technology would be beneficial when it comes to PI Industries. And overall, the sales estimation for this company is roughly $30 million by FY25. Also, the acquisition will help PI Industry to develop and manufacture other biological products which are currently not manufactured in India. So overall, the street is estimating for PI Industries that the deal is value accretive and a new product growth category comes in.
All right, Sharad, thanks so much for taking us through all of those deals that are expected to go through, and all of those counters will be in focus today. But let's move on. And sources say that SEBI's board meeting today may discuss new norms for curbing finfluencers as well as reviewing the FNO eligibility criteria. Topics include restricting association with finfluencers, AIF valuation norms, mutual fund investments in overseas funds, and more. My colleague Ankur is joining us this morning with what's on the agenda. Ankur, all eyes are going to be on this meeting. Tell us what's expected to be discussed.
Yes, around 20 items are listed in SEBI's board meeting today, and what we understand is that the finfluencer norms, which has been a talk for a while, might be approved in the board meeting today. Remember, SEBI had earlier proposed that all the entities which are regulated by SEBI should not have any association with influencers, and so The idea is to curb the association of influencers with the regulated entities so that the platform is not given to such kind of advisors which are not registered with SEBI per se. Apart from that, we also understand that FNO eligibility criteria is one of the items which might be discussed. If the draft norms are implemented, around 75 stocks may be out of FNO and a dozen stocks may be making inroads there. Apart from that, we also understand that the regulator may approve an application of international private equity and venture capital valuation guidelines, and that will be for unlisted securities held by AIFs. We also understand that few more agenda items may include relaxation for AIFs in the board meeting today. So all eyes will be there on the SEBI board, which will start in the second half today, and the outcome may be announced after evening around 6 p.m.
Thanks, Ankur, for joining us bright and early this morning on that update coming in on that all-important SEBI board meet then. Let's take a quick break right here, and then when we come back, we'll take a look at some more stock-specific news.
Hi there, still watching Market Cafe. Thanks so much for staying tuned. Let's take it across to my colleague Ansh, who's standing by with a snapshot of what the FNO space is expected to look like today. And Ansh, good morning. Take it away.
Good morning. So let's start with what FIs did. They might be the net seller in cash market, but they are definitely buyers in future and option. If you'll see in previous session, in index future, they added around 22,000 long contract. They even covered around 39,000 short contracts. So net to net, we were up by around almost 62,000 actually. With this, the total long has reached at 66.9%. And with this, the total long has crossed 4 lakh contract and net long has crossed to 2 lakh contract mark for the first time in 7 years, indicating their very strong bullish stance in the market. Now, if you talk about Nifty, then today we have Nifty expiry, also future and option stocks expiry as well. So we may see good volatility in the market. And this series, we are seeing that Nifty is up around 5% this series, which is the biggest gain seen in at least 6 series. Also, the index has touched all-time high for the second consecutive session in the previous session. But with this, the RSI is at almost overbought zone. So we may see some up move, but then a correction is also possible here. Now, if we talk about rollover data, then the Nifty rollover is around 61.2%, which is above its 3 series average, which is a bit of positive sign. Whereas if we talk about option market, then we are seeing that in option we are seeing strong put writing happening at 23,800, indicating good support around this level. Whereas on upside, we are seeing some call buying happening at 23,900, and this is mild call buying, so we may see some up move in today's session. Now, if you talk about Nifty Bank, then the index has expired in the previous session and the rollover was way below its 3 series average of 76.4%. It was almost 71% only. And the index was up around 9% in June series, which was the biggest gain seen in 6 series, same like Nifty. And even the Nifty Bank had touched record high for second consecutive session. If we talk about index options, then we are seeing some mild call buying happening at 53,000 psychological mark, indicating traders expecting Nifty Bank to go a bit above this level. Lastly, let's have a quick view on few FNO stocks that are in focus. And we are seeing high rollover happening in Crompton, About India and Oberoi Realty by over 90%, whereas low rollover in GNFC, Punjab National Bank and Metropolis by less than 50%. Now let's have a quick view on few FNO stocks that are in ban, and we are seeing GNFC, India Cement, Indus Star, Punjab National Bank and Steel Authority in ban list. So keep an eye on the stocks.
Absolutely, Ansh. We'll keep an eye on all of those counters. Thank you so much for that futures and options roundup coming in. But while you're with us, tell us which are the stocks that are likely to be a buzz in trade today then?
Right, so ITD Cementation will be the first stock in focus as they have secured a marine contract for construction of third berth jetty and specified additional work at the Dahej LNG terminal, and this is for around 1,082 crore. Apart from this, KC International is also in focus as they have won new orders worth 1,025 crore in T&D and cable business, and SGVN has also signed an MOU with AM Ammonia India Private Limited, and the parties have actually agreed to cooperate with each other for supply and sourcing of renewable energy for long-term basis for this green ammonia plant. RVNL is also in focus as they have received a letter of acceptance from Southern Railway for provision of automatic signalling for consideration of almost 157 crore. Supreme Industry is also in focus as they have received LOA from Indian Oil Corporation for supply of 10 kg of composite LPG cylinder, the order value for which is around 55 crore. EMS is also in focus as they have received letter of award from Office of Superintending Engineer of UP Jal Nigam, and this is for around 119 crore. Lastly, JSW Energy is in focus as their wholly owned subsidiary has actually signed a power purchase agreement for wind and solar project with Gujarat Urja Vikas Nigam Limited. So keep an eye on the stocks.
Thanks so much for taking us through that. Keep a close eye on all of those counters. But here's some interesting data on what the July seasonality has looked like, over the years, and what the market has acted like, what we can expect stepping into the month of July. Now, when you take a look at Nifty, Nifty has shown a strong positive price seasonality in July, except for both of those election years, 2014 and 2019. The index has closed 9 times in July out of the last 10 years with an average return of 3.3%, and the only negative return was seen of 5.7% in the election year 2019. Moving on, let's see what Nifty Midcap has done historically. Nifty Midcap has exhibited strong seasonality, barring both of those elections years as well, 14 and 19. Midcap index has closed in the green 8 times in the last 10 Julys with an average return of 3.4%, and decline in the last 10 years have only been marked in election years 2014, where Midcap closed 2.4% lower in the month of July, and in 2019, where it closed 9.8% lower. Nifty Midcap has outperformed Nifty 5 times in the last July over the last 10 years. Now, let's take a look at sectorally what has been happening. Nifty Financial and MNC have closed in the green in 9 Julys out of the last 10 years. Nifty IT, Pharma, Bank and Auto have closed in the green for 8 out of 10 years. FMCG, IT and Pharma have outperformed Nifty in the month of July in 2014 and 2019. So important sectors to watch out for, because outperformance has been seen compared to Nifty in those election years as well. No indices have closed in the red in July on more than 6 occasions, and none of these indices have closed in the green in July in the elections years 2014 and 2019 as well. Moving on to some stock specific action. Now, here's a list of the stocks that have closed in the green on 9 or more occasions with an average return, positive return of 6%. That list includes names like Granules, Bajaj Finserv, Bajaj Finance, you have Torrent Pharma, Berger Paints as well as Bharat Forge, Dabur India, Infosys as well as Divi's Labs, making its names on those lists. Now, on the flip side, stocks that have closed in the red on 6 or more occasions with an average negative return of more than 2% has been Vodafone, ONGC as well as TVS Motors. So this has generally been the trend that we have seen stepping into the month of July over the last 10 years. As we head into this month, let's see if these trends continue to pan out and how Nifty performs in the month of July.
Alright then, let's get you some more updates coming in from outside the world of stocks then. Congress has reappointed Sam Pitroda as the chairman of the Indian Overseas Congress with immediate effect. This comes days after he had resigned from the post following controversial remarks in the middle of Lok Sabha elections which were termed as racist. Moving on then, the CBI has arrested Delhi Chief Minister Arvind Kejriwal in the liquor policy case after the Rouse Avenue court allowed the agency to examine the AAP Supremo in court. He was remanded in CBI custody for 3 days and will be produced before the court on June 29th. Following the arrest, Kejriwal also withdrew the petition filed in the Supreme Court challenging the order passed by the Delhi High Court staying this bail in a money laundering case as well. Moving on then, veteran BJP leader Lal Krishna Advani has been hospitalized at the All India Institute of Medical Sciences or AIIMS in Delhi. The 96-year-old leader has been kept under the supervision of doctors of the geriatric department. As per the hospital, the former Deputy Prime Minister is stable and is under close observation. Moving on to some global news then, and the deadly anti-tax protests in Kenya has pushed President Ruto to withdraw signing the controversial finance bill. Although protesters in Kenya say they will still go ahead with a 1 million people march today, despite Ruto accepting their key demand of scrapping the bill.
All right, let's keep it going with some global updates. And Mark Rutte, the outgoing Prime Minister of the Netherlands, has been appointed as the next NATO chief. Rutte will succeed Jens Stoltenberg in October, and his accession to the top position at NATO comes at a critical juncture for the alliance as it navigates the ongoing geopolitical tensions and security challenges posed by Russia's invasion of Ukraine. Let's take it onwards with sports then, and it's a blockbuster Thursday as all eyes will be on the ICC T20 World Cup, where currently Afghanistan is taking on South Africa in the first semi-final. Afghanistan unfortunately has collapsed in just 56 runs in less than 12 overs. Seems like an easy win for South Africa. Later today, Rohit Sharma and company will take on England in the second semi-final, and it remains to be seen if the men in blue can end the ICC trophy drought. Remember, India last won an ICC tournament back in 2013 when they also won the ICC Champions Trophy. Also on the sports front, let's talk a little bit about football. And the Euro 2024 is throwing up several surprises. Last night, Georgia pulled off a shock 2-0 win against Cristiano Ronaldo's Portugal, while Ukraine held world number 3 Belgium to a goalless draw. Belgium are now through to the knockout round, while Ukraine has been eliminated from the tournament.
All right then, Snehi, well, all eyes except for the market will definitely be on what the men in blue do, right?
Absolutely.
But with that, we're completely timed out on this edition of Market Cafe on ET Now. From me, Shreyanshi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.